Notice the date, September 8th, 2025. That will be important. Surging lease rates for silver are once again upending the precious metals market, with traders fearing that possible U.S. tariffs could squeeze already tight supplies in London as price dislocations reemerge between key trading hubs. We're going to skip to the third paragraph. The U.S. market's concern is that the metal might be subject to tariffs. What I wanted to talk about today was how the mainstream financial media is lying through its teeth about what is causing the gold and silver price increases in dollar terms. It does not have to do with tariffs, and it does not have to do with ETFs.
I think gold is the answer. Gold and silver is a leverage to gold. Now, gold, if we go back onto a gold-based monetary system, the price of gold is going to go way up, and then it'll just get pegged at a certain level. Silver will go way up, and it'll blast as far as the returns, percentage-wise, is probably going to outstrip gold by at least a factor of 4.
Gold and silver aren't getting more expensive. They're the only things holding their value. As the dollar continues to fall, the system of paper promises that holds everything together will unravel, leading to corruption, violence, and a complete breakdown of society. Farber also highlights the dishonesty of mainstream financial media, which blames recent gold and silver moves on tariffs and ETF demand. Rafi Farber says tariffs never applied to these metals, and ETF holdings have actually declined since 2021. So, if the reasons they're giving you are false, what's really driving the price? The surge in silver lease rates is part of a broader trend in the silver market. The international spot price of silver has been on a steady rise, recently surpassing $40 per ounce for the first time in 14 years. This price increase has been driven by a combination of factors, including growing demand for silver in industrial applications and investment vehicles such as ETFs. A pivotal development occurred when the United States Geological Survey released a draft of its updated critical minerals list, which included silver for the first time. This designation represents a significant policy shift with profound market implications. If silver tariffs don't materialize despite market expectations, we could see a gradual unwinding of risk premiums, though some elevated pricing may persist. This scenario might occur if policymakers determine silver's monetary role should exempt it from industrial metal tariffs. The gold and silver rallies are a direct reflection of the dollar's collapse. According to Rafi Farber, the world is entering the final recession, which will force a massive round of money printing. This is the endgame for our current currency system. Before we dive into Rafi Farber and MikeMaloney's sharp insights from their latest interview, be sure to hit the subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I'm just a crazy gold and silver bug who's just spouting nonsense because I want to get people to buy gold and silver. No, I'm not. Gold and silver are money. And the dollar price of gold and silver is reflective of the currency, not the metals. And as the currency falls, people lose their minds. Capital gets concentrated in more and more corrupt entities. And as that happens, you have more violence, a breakdown in global order, more assassinations. It has everything to do with the prices of gold and silver. And unfortunately, the end game is not going to be fun, even for those who become wealthy by it. That is one thing that I am envious of Bitcoin holders for, not for their accumulated wealth that it seems that they have now, but the fact that they can rejoice in it, because gold and silver bugs who understand that Bitcoin is a derivative of a derivative of a derivative of money, which is gold and silver, will not be able to rejoice in their wealth because it means the rest of society is going to be extremely poor and deranged as they already are. But be that as it may, we will have a responsibility to help rebuild society once it completely breaks down. That is our calling, that is our job, and that is what we will do because we understand what money is and what it isn't. But anyway, what I wanted to talk about today was how the mainstream financial media is lying through its teeth about what is causing the gold and silver price increases in dollar terms. It does not have to do with tariffs, and it does not have to do with ETFs, demand for which is way down since 2021. But anyway, how is the mainstream financial media lying about the silver situation? You'll see very clearly in a second. They're wrong, or they're lying, or both, or whatever. Bloomberg blah blah blahs about silver tariffs. Silver borrowing costs surge on tariff-driven supply jitters. This is by Sibylla Gross. Notice the date, September 8th, 2025. That will be important. Surging lease rates for silver are once again upending the precious metals market, with traders fearing that possible U.S. tariffs could squeeze already tight supplies in London as price dislocations reemerge between key trading hubs. We're going to skip to the third paragraph. The U.S. market's concern is that the metal might be subject to tariffs. Bernard Dada, an analyst at Natixis, said in an emailed note, this demand for physical is in turn reducing the pool of available leasable material in London and as such lifting silver's lease rate. Yes, it has spiked. That means it is becoming more expensive to lease silver, which means that the demand for silver is high. For what reason? Silver is money and currency is dying, but that is too sophisticated for Bloomberg. Anyway, supply squeezed as investors pile into ETFs. U.S. warehouses expand, pile into ETFs. We're going to examine that too. So the implied lease rate for 1 year is now at a high since this goes back to 2019. It might be at an all-time high from 1980. I don't know. I don't know where the chart goes back. I can't get the data. So we're at about 5% now. And why is this nothing to do with tariffs? Because this, if you notice the date over here, September 5th, 2025. Remember the article by Sybil, whatever her name was, is dated September 8th, 3 days after this. Well, this is the modifying the scope of reciprocal tariffs and establishing procedures for implementing trade and security agreements. This is an amendment to executive order or whatever the number is, which lists now, as of September 5th, a list in the appendix of materials that are not subject to this tariff. So let's go into those materials, shall we? Yes, we shall. Here is the annex itself that lists all of the exempted materials. Note here it says all products that are properly classified in the provisions of the Harmonized Tariff Schedule of the United States, the HTSS, that are listed in this annex are not covered by the duties imposed by Executive Order 14257 as amended. Here are the materials, but let's just look for silver, shall we? Let's find silver. Silver ores and concentrates does not apply. Silver bullion and doré. I don't know what doré is, but I know what silver bullion is. Silver ores and concentrates. What else? Silver compounds other than silver nitrate. They're all exempted. The tariffs do not apply as of September 5th for sure. They never applied. And this is just a clarification that they will not apply. And so why is an article coming out on September 8th saying that markets are worried about tariffs being imposed on gold and silver? And that's why silver is moving from London to New York. Doesn't make any sense. Bloomberg continues here. This is the same article, just continued. Physical supplies of silver were already looking tight, with European refiners focused on recasting gold bars in recent weeks due to confusion over Trump's tariffs. Doesn't make sense because the tariffs don't apply to gold. Meanwhile, inventories in London have dwindled as investors pile into exchange-traded funds. You hear that? Pile into exchange-traded funds, backed by gold and silver, which have clocked year-to-date gains of more than 35% and 40% respectively. Wow, so much demand for ETF, which needs gold and silver, which is why there's so little liquidity of gold and silver in London. 35%, 40% sounds like a lot, doesn't it? Well, let's continue. Bad doubts linger over Trump's tariffs, still the tariff thing, and it is incredibly difficult to trade in that uncertainty. If you look at US ETF holdings, they've absolutely exploded. So there's been ongoing demand, he said. It wasn't a one-off. So let's look at this absolute explosion in ETF holdings. So two explanations. One is tariffs, and two is ETF demand, and ETF holdings have skyrocketed. Absolutely exploded, says Bloomberg. Is that true? So why are they trying to make you think that it is ETFs and tariffs? Because they don't want you to know the real reason, and that is that the dollar is dying. And as the dollar dies, gold comes into the country of the reserve currency, which is the United States, which produces and prints the dollar as a way, for example, an analogy, when you are injured, your blood goes into the center of your body to protect your internal organs, and it leaves your extremities. That is what is happening to the monetary system. The dollar is dying. Bloomberg does not understand it, does not want you to know that, and then want you to think that it's tariffs and ETFs. It is not tariffs and it's not ETFs. We just showed you that graphically. What is happening is the currency system is dying, and once we get to the final bust, we will get to the final printing round. Once we get to the final printing round, it will be over.
The U.S. national debt is roughly $35 trillion, and according to Mike Maloney, that's a trap. He warns that the Fed is cornered. If they devalue the dollar to manage the debt, they will also devalue treasuries, driving interest rates higher. This will force a monetary reset where gold is restored as a Tier 1 asset. Central banks are already preparing by stacking gold, but Maloney predicts silver will be the real winner, outperforming gold in percentage terms before the peak. Silver has emerged as the clear favorite among experts, with many betting it will finally break its 4-year jinx and outpace gold in 2025. The white metal is already ahead with 42% year-to-date gains versus gold's 36%. Both precious metals are posting their strongest performance in 7 years, far outshining equities and even Bitcoin, but silver is giving its shinier peer a genuine run for its money. Rising global tensions and renewed retail interest could drive silver sharply higher, potentially toward $100 per ounce. Let's get back to the interview.
The debt is getting devalued anyway because the mathematics of fiat currency creation dictate that fiat currency always has to lose value. The currency supply always has to be diluted or the whole system collapses. But the Fed they are painted into a corner. They are in a trap. If they decided to move everything to a central bank digital currency or the stable coins, and then they were going to devalue the dollar, what does that do? They're basically devaluing treasuries. When the public and other countries, investors, see that the dollar is being devalued, the purchasing power is falling, they demand higher interest rates. Higher interest rates cause the refinancing of our national debt, that $35 trillion, to go through the roof. It would be astronomical. I mean, if they did devalue it to the point where they could wipe out this debt, the cost of refinancing the debt, all the treasuries have a time component to them, and they mature one day, and they're basically paid off, and they're extinguished, they're gone. And so unless we've got enough tax coming in and our expenditures are way below our income, we can't let that happen. And we just passed the big bad boondoggle, or whatever I was calling it, this bill what is the deficit spending going to annually right now?
2 trillion?
Yeah, $2 trillion that we are going to spend more than our income. And so we have to not only roll over and refinance the current treasuries that are maturing, but we have to add that many annually. And the cost of the interest on those, if we're devaluing the dollar too fast, nobody will buy these things. Not even the issuers of stable coins are going to want to be touching these things. And it'll cause countries around the world to dump their treasuries, causing the interest rate to go even higher. And so you can't extract that much tax out of the population to keep the game going. The Fed is trapped. We are really in the end game of a monetary reset. And, he mentions gold there in the middle of this, but then turns toward stablecoins and crypto. I think gold is the answer. Gold and silver is a leverage to gold. Now, gold, if we go back onto a gold-based monetary system, the price of gold is going to go way up, and then it'll just get pegged at a certain level. Silver will go way up, and it'll blast as far as the returns, percentage-wise, is probably going to outstrip gold by at least a factor of 4, but it will go into a bubble phase. And if it isn't part of the monetary system, however, there are countries buying silver for their central banks are buying silver. And so it looks like it could be remonetized too. But gold would go up and hit a plateau. Silver would go up and then come back down. But when it goes up and peaks, it's going to be many times the performance of gold. In my opinion, I don't encourage anybody to follow this without researching it yourself and making your own decisions. Get some other financial advice. Don't rely on anything that we say. But what I'm doing Yes, I bought a lot of gold, but when I bought whenever the gold silver ratio was high, I buy silver. With the gold silver ratio where it is right now, I'm still buying silver, not gold. And
Yeah.
I will change at certain ratios. I will be changing some of that gold into some of that silver into gold, and then depending on whether I think the dollar is toast or not, I may be changing some of the gold and silver into dollars directly and buying real estate or investing in my farm, stuff like that. As you pointed out when you were running me through this, they had basically it was partially in 1933-34, and then in 1970 they removed layer one. So we've got this incredibly unstable system of nothing but IOUs on top of IOUs. And at the end of the line, it's IOU more IOUs. There is nothing behind any of this. And so whether or not they add stable coins to the top, another piece of level 4. So you'd have buying on credit and stable coins both up there on level 4. It's still built on a pyramid, which is inverted, built on sand.
Exactly. It's not going to survive.
Right.
And sometimes,
and the thing is, when they reintroduce a level 1 to make the whole thing stable again, it looks like gold is going to be the thing that gets reintroduced. That's what central banks have. That is what central banks consider a tier 1 asset. And it's what Trump is talking about and everything else. And it's what Eastern central banks are currently buying, getting ready for this. It all points to level 1 coming back. And if you're ahead of the transition in this new monetary reset, if you're ahead of it and you've got gold and you've got silver, you're going to make massive gains in absolute purchasing power value.
The catalyst for silver's dramatic price surge can be traced to specific policy developments that reshaped market expectations. A series of regulatory decisions created a framework where silver suddenly found itself at the center of trade policy considerations. As central banks prepare for a reset and silver gains momentum over gold, are we witnessing the early stages of a monetary revolution? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.